I'm delighted to introduce Bill Richmond, who's the CEO of BlueBet, an Australian gaming business. Good evening, Bill.
Good evening, Russell.
Good. Should we start off with, could you just give an overview of BlueBet's history and its current corporate structure, please?
Yeah, sure. BlueBet's obviously, as you said, an Australian wagering company. BlueBet itself's only been operating for just on 7 years. We've got a very experienced management team who've worked together for a lot longer period than that. Our executive chairman, Michael Sullivan, who's a long-term bookmaker in Australia, was previously the CEO of Sportingbet Australia, which was publicly listed in the UK at the time. I was in that business for a long time myself, as were a number of the other senior management here, everyone from our trading staff to our customer support staff, marketing, and probably most importantly, our IT staff. The technology platform, we own all our own technology at BlueBet, which we think is critical in the market. And all our team, or a lot of our team, came with us from Sportingbet. So we've got a really experienced team who know how to build technology platforms specifically for the wagering market, which is certainly very beneficial. So as I said, BlueBet 7 years we've been running. Started really with the sole focus of getting the foundations right. It was just the management team who owned the business. We have no partners, no debt in the business. So it was really forming the foundations of getting our product right and getting our technology right and getting our team right. So we took a couple of years to work through all that process and get ourselves in a really good position. And after that, we started to invest more in the marketing of the business, which certainly saw our growth accelerate quite quickly. And all of that sort of led to us IPOing in Australia on the ASX in July last year, which was certainly an exciting time for us. And really had two major goals. The IPO was really just to give us some more capital to invest in turbocharging the growth in Australia, but also to allow us to access some exciting opportunities in the US. We raised 50 million Australian for that. The majority of which is going to the US. We'll talk probably some more detail about that a bit later. We're certainly not going there as trying to be a national player and taking on some of those really big firms, because as we often say, to be taking a knife to a gunfight. But we've certainly got a very clear plan for what we want to achieve both in Australia and the US. So the Australian business, as we said, is really a scaling story. It's really just continuing to grow, on the foundations that we've built. And the US business, we have a slightly different model, which we'll touch on later.
Okay, in that case, just delve into the Australian business. Just talk about BlueBet's market positioning, the competitive environments, and what you think the growth outlook is, please.
Yeah, certainly. Yeah, the Australian wagering market is one of the most competitive in the world. I think that's fairly well known. We only had circa 1% market share at IPO. We've certainly grown that very rapidly again since IPO, and continue to grow very aggressively. We're continuing to take market share in Australia. We're tracking over some an extremely and high watermark really from this time last year in Australia. We were in lockdowns in all our major states. We certainly saw an accelerated migration to online. We still had a fairly strong retail presence in Australia, but the pattern obviously of that migration to online was well underway. But certainly we saw an acceleration during COVID. And pleasantly for us, we've kept all those customers and continue to grow, on the back of that. So, we're well positioned as a challenger brand in Australia. The big players here are large multinational companies, with Flutter and Entain being the sort of two major international corporates in the market. But as a challenger brand, our focus is very much on continuing to take market share away from, those big operators, plus Tabcorp, who were had the retail monopoly in Australia. So we feel that there's still a huge amount of opportunity for us to continue to grow in Australia. The great thing with the way we've built this business is we've done a lot of that work up front to make it incredibly scalable going forward. We can double, triple our business really without adding to our headcount or our infrastructure. So we're in a great position to continue to grow the business and really see those numbers flow through to the bottom line.
And you've alluded to it already, you've entered the US, and there's a two-pronged strategy there. So could you talk about the first prong of that in terms of the B2C offer, what you're doing, what the competitive background is, the states you've entered, and the investment requirements?
Yeah, sure. So as I mentioned, in Australia, we are purely a B2C operator. In the US, we're very much a twofold strategy. And, we're leading with going to a handful of states. We've got market access secured in 4 states, which are Iowa, Colorado, Louisiana, and Indiana. We're going to those states, straight as a B2C operator, really as a proof of concept. But we feel there's a clear path to profitability for us in all those 4 states, which is a really large reason behind us picking them. They've got very acceptable licensing costs, very acceptable taxation, and they're not part of some of those huge media markets that we'd have to compete in the US, where you see that huge cost of acquisition and that capital burn that we've seen a number of other parties go through in the US. So from our position, there are 4 states we can go in, get a good foothold, get ourselves to a position of profitability within a couple of years, and then really use that to improve our product and move towards our longer term strategy, which is a sportsbook as a solution B2B model. But those 4 states, we feel very confident about the strategy in those states. We've got a great team we've built out of Denver and Colorado. So those 4 states are really going to be a focus. We're not obviously going with a nationalized marketing campaign, as I touched on. We're going with a hyper-localized approach to that, which we feel, is the one advantage we have over the big players. They're obviously focused on this national, this national land grab, whereas we can go in these states and really focus very much on what people in those states want around their teams and what's important to them. So we feel that we can get the market share we require to be successful in those 4 states with this hyper-localized approach. So we're live in Iowa at the moment, looking to go into Colorado in the very early part of next calendar year, and Louisiana and Indiana, they're not far after that.
That's great. So it sounds like a good segue into the B2B potential of the US. Yeah,
certainly. And as I touched on before, what we're trying to do in the US is really leverage what we're very good at in Australia. We've run profitable sportsbooks in Australia for 20 years, and we've built technology platforms, both front end and back end, here for the same amount of time. So it sounds funny to say about something like the US, but there is certainly a lack of knowledge about those 2 things. There's a lack of knowledge about how to run a profitable sportsbook. There's certainly huge knowledge about casinos in that area, but sports betting is very different. There's a greater risk involved with anything that's more skill based. So certainly that's a level. And then technology platforms, and obviously it sounds funny to say with America that they're behind in technology in any area, but this is one area, because it was such a greenfield opportunity. There'd been no sort of legalized online gambling until recent years. So our ability to build technology platforms specifically for this space, we think can be very attractive to partners over there. We're certainly not aiming at the top end of the market. They're going to be investing huge amounts of their own money to get this right. But we feel there's a lot of other people who have licenses, and that might be mid-tier casino groups, it might be media organisations. We think there's a wide range of people who might want to have access in one or multiple states, who have a great database, have a great brand, but they don't have any of the expertise in running a sportsbook or building quality technology platform that can compete with those tier one operators. We can give them a platform that can compete with those tier one operators. We can run it for them, every element of it for them, not just a platform, not just prices. We run the entire part of the business for them, leverage obviously their brand and their data and their databases, which we think gives both partners the best of both worlds. So a long-term solution really is there. We're not having, with that, it's very much a capital light strategy as well, because we're not having to go and do that customer acquisition. The customers have already been acquired or recognise the brand. So it's very much a capital light strategy. We'll have to make some investment, obviously, in the B2C states where we're going into those states. But that's why as I touched on, they're lower cost media markets. So we can go in there and acquire the customers we need, and then we move this longer term model. It really falls on the partners to bring us the customers, and we'll do what we do best, which is running the sportsbook and building the tech.
And earlier today, you released your Q1 results. So would you mind just giving a brief summary of the key highlights in the results today?
Yeah, certainly. We're very much focused on Australia. The US, we've only been live in Iowa for a few weeks. So the numbers there, it's very much been a soft launch in Iowa too, which is very much the plan, get the product right. So yeah, our results very much focused on Australia. As I touched on, we're tracking over a huge, probably the busiest time in this industry in history of this quarter last year, when we were in lockdown in New South Wales and Victoria, which are clearly the two biggest states in Australia. And on top of that, we saw enormous growth there, particularly in acquiring customers. And in this quarter, we've seen a growth of over 40% in our active customers again versus against the PCP, which is very strong. Our turnovers continued to rise as well. But as I said, there's been some retraction amongst across the market as a whole. So we're certainly very positive that we've continued to grow. September was our record ever month in terms of active users on the platform, and that momentum's continuing to in October, and we're very optimistic about breaking that record again in October. So from our point of view, the business is in a great position. We've got great momentum, and we look to really continue to take share in Australia. So those results position us well. We're very well financed to achieve everything we need to do. Having only done our IPO in July last year, we've got just south of $40 million in the bank. The Australian business cash flow positive, so it's certainly not a drain. It's actually continuing to add to that position. And then we're investing in these 4 B2C states in the US at the moment. So we're very well financed to do that. It's only a 2 to 3 year plan we have to be investing before we move to our really that capital light model where we don't have the ongoing cash burn that other businesses have. So the business is incredibly well positioned to achieve all its goals that we set out in the prospectus.
Okay, that's thanks for the overview, Bill, and thanks for taking the time to speak to us today.
Great, thanks very much, Russell.